Hi everybody, welcome to a very special video, Intraday Tactical Strike Strategy. We are going to cover most pain points when you trade intraday, and you're going to have a strategy in a trending and a non-trending market. Before we start, standard disclaimer: strategy explained is only for educational purpose. It's not a trade recommendation. Every strategy contains a certain amount of risk. Now let's talk about the strategy. Now, before I start, I have a very important question to ask you. Before you enter into any option strategy, what are the odds two condition is likely to happen when you enter into any strategy? Number one, market is going to be trending. Number two, market is going to be non-trending. You trade intraday strategy or you trade positional strategy. It's just like two sides of the coin, head or tail. It's just that when the coin is in the air, we do not know which side it's gonna flip to. Point number two, when you trade intraday, your main thing which you keep asking on the comment section, because you want to improve, you want to learn the better things, that is, you don't want to do a lot of naked selling. You want something which is low margins, and in this video we try to do a low margin strategy. Also, gamma control. I'll show you how do we really control the gamma. Let's cut to the chase and deep dive in. Let's understand everything. Next few minutes, be fully focused. So here we are on an option simulator. I have opened option chain, a simple option chain. And by the way, I've selected monthly. Why? Because monthly will have lesser theta comparable to weekly, of course. Now let's see where the market is. Market is currently 24,950. As you can see, this is at the money. So I'm just explaining you the basic structure of the strategy, and then I'm going to change gear. I'm going to go a little advanced today. So first thing we're going to do is we got to go out of the money, roughly 200 points. So 100, 200 points. If you trade other markets, probably American markets, roughly 0.35 delta, 0.4 delta is what you look to target. Now here, what we do is that we buy the call. And yes, we are doing this intraday strategy. Point number one is done. After that, what we got to do, we got to go towards the put side. And then what we have to do, probably we go 200 points down the market and we buy the put as well, right? Because obviously we do not want to trade direction. So far, we have long one call and we have long one put. After that, we got to go 200 points more down. And now we look to short a put. Now, I rather sell 24,500 put because this is round figure. There's not going to be any liquidity issue. So we sell this put. Long the call, long the put, 200 points down. We short the put. When we do something like this, few things will really jump out from the screen for you. Let's see how this looks. And this is how it looks. And remember, we are not looking forward to hold the trade till expiry. This is a 0 DTE. That means we look to square off our trade before the end of the day. Now, when you do this, remember a couple of things. Number one is that the estimated margin requirement, which you can see here, this is a simulator, so margin is not fixed. Obviously, please check with your broker how much is the margin is. Even if you trade American markets or you trade any of them, always check the margin with the broker. Now we have got this thing out of the way. Let's talk about number 2 point, which I'm sure you're looking at here. What are you looking at? You're looking at this little red zone which you see over here. This red zone only exists if you hold on to the trade till expiry, and there is good entire month remaining for the current month, so that I'm sure you're able to get it. Now, like I told you, head or tail, only two things are going to happen. We do not need to unnecessarily complicate options trading. What did I say in the beginning of the video? I said either market is going to be trending or the market is going to be non-trending. After the strategy explanation, I'm going to explain you my take about this. Now let's run a simulation on a trending and a non-trending market, and let's figure this out. Let's go a little more deeper. It's only going to get more exciting from here. So here we are on a simulator where we're going to really stress test it. Remember what I told you? We look forward to have some kind of a trending day. Now, usually why am I picking Tuesday? Because Tuesday is a weekly expiry for Nifty. So Tuesday is the day where market has been quite volatile recently. So let's pick this, and there will not be any changes in our strike selection. That is, we go 200 point above, we simply buy the call. After that, we go 200 points down, which is 25,000, and we buy the put as well. But on the put side, what we're going to do is we will go 200 points more down and now we are shorting this particular strike, and this is exactly what we are doing, and now we sold it. And is there going to be any changes on how things look? Let's see. There is no changes at all. Like I said, only two things are going to happen. Market is going to be trending, or market will just be stuck here. Remember, in terms of margin, like I told you, this is the earlier one. This is much margin is what we expect when we enter with one lot into the trade. Now let's see what happens. Now this is obviously a trending example. After that, it's going to be non-trending. Now market expires at 3:30 p.m. and when we trade into the markets, we are not looking to hold a strategy like this for overnight. Now, as you can see, market has picked some kind of a trend on the upside, not a crazy trend, because as you can see, if market picks up a crazy trend, you could see very well what we can expect over here. So I've taken a day which market is not really trending, but just a little bit of move on either side, either up or either down. So in this situation, market has been trending up. And as you can see, the time, it is around 3:20, so only 10 minutes remaining for the market to close. And what you are looking at is that we have made some amount of progress with the strategy as the market trended. Now I know what you're thinking, that if market don't trend, then what exactly is going to happen? Like I said in my previous videos as well, this is not the channel where I'm only going to show you good things. I'm going to show you the things which when the strategy do not work as well. So get ready. The next example is that when we're going to trade and market will not trend, how we are going to handle when things go against us. That is the name of the game. So let's see that now. I'm going to pick the next week and let's see how things go from here. So here we are on a different example, and what we're going to do is we're going to do it very quickly. 200 points above, we long the call and then we long the put as well. This is something which we can pick from the option chain, and here we longed and we longed again. After that, on the put side, we're going 200 points more down, we have longed this. So just simply calculate 200 points more down is 24,550. Although I prefer the rounder strike, but I guess that's okay because we got to keep the example with the same standard. Okay, and now let's see how this looks. This looks to be like this. Now, what is the number one fear? You tell me. The number one fear can be that market remain where the market is. Or number two, what if market really trends? If market really trends, that example was the previous one. So this one is going to be different because I value your time and I value your attention. And I do understand that when you come on this channel, you expect to learn different things. Now here, market is just moving a little bit. That's fine. Let's hold on to the trade. Let's see what happens if market do not trend really wild on either direction, what we can really expect from it. I've picked the day of Tuesday. The reason being that usually when market expiring on Tuesday, high chances that market may trend. So that is how it is. And now what you see is that there's not much of a major trend in the market. Market is around 24,850, around the same price. Market has not been trending at all, and market is here and the entire day have gone. And what do you see here? That if we square off the trade here, what you see is that the trade is showing some kind of a negative. Like I told you in the beginning, there is no strategy which is 100% all the time, every time. But as you can see, if market starts to trend very, very fast, like in previous example, the main difference is when things go in our favor, who remains in control? The trader should always be in control. Whenever you enter, always imagine the worst outcome of the trade as well, and try to get a solution of the worst outcome, which you could see on your screen here. Also, you can put a hard exit, a stop loss for yourself when you trade something like this. If you want to carry this trade for the next day, although it's not really recommended because you want to save the overnight theta decay if the market is not trending. Now I have some more points which I want to tell you, which can help you in this strategy. Now, challenge number one. Now, obviously, when you trade something like this, you want market to really go, in either direction. You want a trending day. Now, in the past, I've made a video on when do you expect good trending days. You can probably find the video in the playlist if that video still exists. So always better. Now, having said that, what maximum people gonna do is they look to trade this strategy on an event. Am I right? Yes. Suppose if any kind of a policy announcement, then traders look to trade something like this, something similar. Let me tell you, after the event, very high chances that IB may go down, which is not good for this particular strategy. Like I said, when to do, what to do, it's very important. What not to do is even more important than what to do. Like in this strategy, you learned you wanted something which is non-directional, which probably has very less margin. If market trends, then we should be in control. If market do not trend, then we should be in control as well. So something like this. And by the way, you could also do it opposite as well. That means here we made bullish, could also try and make it bearish on the bearish side, a strategy like this. That's a exact reason why I say one has to improve continuously in the field of options trading in your desired field. I'm sure you must have learned some good points from this particular video, from this particular strategy, what to do and what not to do. Thanks for watching, and I wish you really, really well with your trades. Take care. Bye-bye.